Hey guys, welcome back to the channel. In today's video, we're going to be discussing my stock picks for the week of February 22nd through the 26th. Just to reiterate, I'm not a financial advisor. Make sure that you do your own research before investing in a stock. Also, guys, if you find value in today's video, smash that thumbs up button. It really helps grow the channel and push the video out to more people. And of course, if you enjoy our content, make sure that you subscribe to the channel, hit the notification bell. That way YouTube can let you know every time we release new content. So let's dive right on into it. Okay, guys, so here's a recap of last week. My picks were SNPW, HEMP, FOLD, and UVXY. So, kind of a dud week, in my opinion, to be honest with you. Not really much happened. SNPW just was actually down about 14%, which is only about 2 cents. So, not a bad week, but I think we're going to have a really good week in this stock. This upcoming week. HEMP about the same thing. It went down, and then the last day of the trading day on Friday, it popped up about 20%. FOLD still providing a good buy zone for anyone who has not gotten into this stock. It's still about in the $12 range. So if you haven't got in, it's still really undervalued. You can grab some shares to up to 12 and maybe ride it up to about 15 or $16. So this is a longer term swing, guys. It got beat down pretty well. So it's going to kind of stay stagnant for a little bit before people are going to come back in to buy. And then UVXY, I was expecting a lot more volatility in this particular ETF. Remember, this is the one where if the market goes down, this ETF goes up and vice versa. And we just didn't see a whole lot of volatility. We saw a slight pullback, but it wasn't anything significant to make this thing rise up the 20 or 30% that we were hoping for. So you have a couple of options on this play for UVXY. Is you can one, of course, you can cash out and cut your losses if you haven't done so already, or maybe you caught the little spikes that it hit up, and maybe you cashed out. Who knows? But you can cut losses on it. You can average down, and you can get your price per share cheaper. That way, whenever we do see more volatility, this is going to pay off for you. But one thing to keep in mind with this particular play for UVXY is, I remember last year there was another ETF. There was TVIX before it got delisted that actually had a reverse split. So basically, it made the price per share go up and then began decaying again and coming down. So it's something to kind of be cautious of at these price levels, because it is getting lower and lower and lower. So if they happen to do that with this one, it's going to bump the price per share up, which is going to keep your value the same. But once it starts decaying, then you have room to lose a lot more money. So just be really cautious on this one. And if we don't see a whole lot of volatility this week, it could dip down into the sevens or even the $6 range. But again, it can go the other way as well. If we see a big pullback and some volatility, it can pop back up into the tens. So it's just kind of manage your risk tolerance on this one. All right, guys. So here's my picks for this week. So I have SNPW is back on the list. HEMP is back on the list as well. So here are my entry and exit points for all of these plays, and then we're going to break down the charts as usual to show you some key support and resistance levels as well. So SNPW entry is going to be anywhere from 12 cents to 15 cents. And if you're looking for a short-term swing, I would recommend a 25-cent exit point. Or if it has a lot of volume, guys, you can ride this thing up a lot higher, because I think it's going to go higher. But just letting you know, that's kind of my initial game plan, is I'm looking to double my money, and I can always get back into it later after the pullback. But if we have a lot of volume, then I'm just gonna watch it very cautiously and set a stop loss and keep moving the stop loss up. And then if it happens to drop, then I'll just cash out it that way. HEMP, HEMP, is my entry is going to be 0.015 or below. So if you watched any of my other videos, you know that I cashed out on this one when I made 114% for my initial swing, and then I got back in at these prices. So anything below that's going to be great, because I'm just going to average down, and eventually I'm trying to build out my position to about 100,000 shares, and then wait for it to hit 50 cents, 25 cents, 50 cents, and then that dollar. is what my three cash out points are going to be from this point on. Okay. Next one that's that's creating a good buying opportunity is IDEX, and I got into this one at about 378, 380 last week, and I held through the weekend, and then it actually dipped down to those levels again. So Monday morning pre-market, you could buy some more of these at these levels, and ride it up into the mid to upper fours for a good swing play. Another one, guys, that we're going to talk about is Genius Brands, ticker symbol GNUS. We talked about this play a couple of weeks ago. I made a video on how it was creating a good swing play opportunity. It was in the $1.80 range. I think it was like 188, and I said you could have wrote it up to about 215, 220, and it popped up to there and fell right back down. So I'm looking to buy some of this on Monday, and I'm going to hold it. This is going to kind of be a longer play for me, but I'm waiting for it to get to the $3 mark or above. But I'll show you on the charts here in a second how I think it's actually poised for a breakout. It's just kind of a matter of time. And then the last one, guys, is going to be FNGU. This is the 3 times leverage ETF that tracks some of the major tech players in the stock market. And I'll show you a list of their holdings here in a minute. But anything in the 30s or 40s, I feel is a good buy. And and this is going to be, again, a longer term play for you. But I think this is going to end up easily doubling, possibly tripling the price per share in the next couple of months. Okay, guys, my watch list and my dip buy. So I'm watching Givo very carefully. If you haven't seen the video that I made on Givo yesterday, it should be popping up right here in the right-hand corner. Take a look at it. And also, of course, guys, I'm always looking to dip buy Zion Oil and Gas, ticker symbol ZNOG. And as it falls, we're just going to keep on buying more and averaging our costs down and waiting for that initial spike. But we did see a potential cup and handle pattern on this particular play forming, so you can expect a dip on Monday morning at the open. And key thing to watch is if we bounce off of that dip. So if we hit that 74, 75 cent mark, if we bounce off of that, that's a really, really good sign. If we don't, then we have potential to go lower, and the cup and handle pattern may not be forming like I expected. So anyway, let's go ahead and look at the charts and see what they're telling us for our buys for this week. Okay, guys, here's SNPW. One thing I didn't mention earlier was the DEM, the Department of Environmental Management, has actually given them a letter of intent for their one of their subsidiaries, Med Recycler, their renewable energy process. So that's really big. This is in Rhode Island. They gave a letter of intent to grant a license for them to um, perform their renewable energy process. So I think that news right there could send this stock higher. And you can look here, we're kind of just hanging around that 12, 13 cent mark, and we're right in fair value territory. We're getting close to crossing over on the MACD. So hoping on Monday we see some buying coming in, and we can bust through that 13 cent mark and start pushing our way back up towards the upside. So your resistance level is going to be 0.1337. So basically, if we get over 13.5 cents to 14 cents and hold there, that's a good sign. If we don't, if we start selling off again for some reason, then your support's going to be right at about 7.5 cents. I don't see that happening. I think that we push above and we start moving forward. So past the 13 cent mark, about 13.5 cent mark, your next resistance is going to be about 17.5, then 21.5, and then up and up. So if we if we rise above that this week and we get to above that 26 cent mark, then our next resistance would be about 35 cents. Okay, so just keep that in mind. Just kind of see, just wait and see what kind of volume that we have coming out on Monday. If we do change from a bearish to a bullish pattern on the MACD, and I do think we still have some room to run past that 25 cent mark, I'll make another video breaking down the charts this week for you to kind of keep up with. All right, guys, here's HEMP Incorporated, ticker symbol HEMP. As you see on Friday, we got a buy signal on the 4-hour, and we are starting to kind of lose steam as far as our bearish pattern on the MACD. So hoping that we can push up and get a little bit higher. But one thing to keep in mind on these, especially on these penny stocks, this buy signal doesn't necessarily mean we're going straight up. This can easily get dumped down and turn into a sell signal right off the open. So just keep an eye on it. But in this channel here, this is a good buy zone, guys. We are above that SMA line. Okay, that's still a good sign. But my support's going to be 0.013. My resistance 0.017. Okay, so anything in this area here, in my opinion, I would look to start my position, and and if it falls down lower, then of course average down. Okay, guys, so here's Ideanomics, ticker symbol IDEX. So you see that we had a sell-off, and we bounced off of that SMA line. And you see here we were in undervalued territory. That's about where I bought here. We had a buy signal, pushed up all the way to about $4.28, and then fell right back down. So maybe it might consolidate around this area here before pushing back towards the upside. But you see that we are losing steam as far as our bearish pattern, and we should be pushing back up and forming a bullish pattern fairly soon. So you can enter in around here. I would watch it off the open though, just to make sure it doesn't, fall back down and go below that SMA line. Because if it goes below that SMA line, that's a bad sign for us. That means we are for sure changing directions, or we're going to be in a downtrend. I'm hoping it doesn't do that. I hope it, we get some buying in here. Worst case, we just kind of keep bouncing off of 365 before we push up and pass that 443 resistance level. So your support's going to be 365. Your resistance is 443. Myself, I'm in about right here, and I'm going to ride it up closer to that, 440 mark, and I'm going to cash out before it even gets to that resistance level, just to play it safe and take my profits. Okay, guys, next one up is Genius Brands, ticker symbol GNUS. As you can see here, we've been just kind of bouncing up and down from 180 to $2 back and forth, and I think that we're setting up and we're poised for some type of breakout. We just need some type of news. So as you see, we're at the very, very bottom, guys, of the fib level, and any type of good news is going to send us moving higher. So I'm hoping that we can break out and bust above that 325 mark, which is our first key resistance level. Our support's going to be at 94 cents. So if for some reason we see this stock trading, further down, then as long as it bounces off of 94 cents, you can use that to, to possibly average down. But I'm going to get in here at about the 180, 190 level, and then wait for it to get some type of news and break out closer to that $3, 325 mark. All right, and our last one, guys, is FNGU. This is a 3x leverage ETF that tracks some of our major players in the market, which I'll show you their holdings right before the video's over. So your key support is going to be 37.20, and your resistance is going to be 46.49. So keep in mind on this one, guys, you may see it push back down and hover around in the 30s before taking back off, because all the holdings that it has, these tech plays have been booming. So we're seeing some corrections in all of these plays. So if they correct and they go down, this ETF is going to correct and go down as well. But once they all recover and start moving back up towards the upside, so will this, and they try to get you 3 times of what all those plays are getting. Okay, so let me look at the holdings, and I'll just kind of give you an example and show you what type of plays you're dealing with for this ETF. Okay, guys, so these are just some of the holdings that FNGU has. You have Twitter, Tesla, Apple, Facebook, Google, Alibaba, Netflix, Amazon, BIDU, and NVIDIA. These are just some of the stocks that are inside this ETF. So as you see, I mean, these are all some of the bigger tech plays that you can get your hands on, but they're, all their share prices are so expensive. This ETF is a way to kind of get your hands and get a piece of each of these particular plays and basically ride off of their increases in the market. So for this particular ETF, I do see it doubling, possibly tripling over the next couple of months. So if I mean these are cheaper prices. So if you get you some shares at $30, $40 and just sit on it and just wait for it, because as these stocks move up, so will this ETF. Okay, so I have a lot of confidence in this one moving forward. Just keep in mind though, if these stocks take a dip, then this thing could correct pretty hard as well because it's a 3 times leverage ETN. And that's all I have for today, guys. I want to thank you for watching. Make sure that you like the video, subscribe to the channel, hit the notification bell, and comment below on what your stock picks are for the week, and if there's anything else you'd like me to cover on the channel. Other than that, guys, we'll catch you in the next video.